Hello, 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 hello. Hello, 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 hello. Am I good? Am I good? Am I good? Oh my goodness, this is a all right, y'all. Give me a quick second to send this all back out. Um, we've been having some technical difficulties, but we're going to get this going and on the road. We're going to get this out the way. Again, I am sorry for the technical difficulties. I don't know what happened. It could have just been Wi-Fi or something, but it seems like we'll be fine now. It's a little slow, but we'll be fine. Couple more Twitter links, and I will be good to go. All right. All right, let's get this show on the road. Here is the Google Meet link if you want to join. All right. Presenting. All right, we're good. One more sound check, and then I'll start it. All right, let's go. What's up, everyone? Art Turner, Data Productions Media. Dreams are tangible aspirations where we scheme our dreams into existence. Our monthly Data Capital conference call, number 15, May 30th, Thursday. Normally, it's on Sundays, the last Sunday of every month, but it was Memorial Day weekend. I had family in town, and there was a bunch of things going on. And I needed a couple more days to go through the quarterly reports of LTNC and CEI, and make sure we have everything set up and ready to be digested from all my viewers. Before we start getting into the slides, once again, I want to let you know that we've been doing this for 15 months now, every month. And, Data Productions Media, Capital Investments, monthly YouTube live stream stock presentations, that equals 333 in reduction. And again, disclaimer, I am not a financial advisor. All investing, trading risks you take, you're on your own. These conference calls are for education and entertainment purposes only. Any information discussed to be used is at the discretion of the individual, not Data Productions Media, Capital Investments. Data Productions Media, Capital Investments has zero liability in any outcomes from anyone using information discussed in these conference calls. All right, and so for the meeting 15 outline first, the backbone of everything, which is important because it lays the groundwork for what we're going to be talking about when it comes into the quarterly reports, is debunking the distaste for dilution. All right, that's going to be the first topic we go over, and that's going to help us understand what the things I bring up for LTNC and Camber Energy. And then we're going to get into LTNC LockdIn, the Q1 2024 earnings report. We're going to break it down into 4 different sections: the great, the good, the bad, the ugly. The great, gross profit ratio, which we're going to get into. The good, cash from financing. The bad, dilution from lawsuits. And the ugly, accumulated deficit, negative stockholder equity. We're going to then on the back end, we're going to get into Camber Energy's 2024 Q1 earnings report, CEI. We're going to get into the top 2 performers of the D.A.T.A. dividend portfolio, the bottom 2 performers, and we're going to get in an honorable mention. And if anybody has any questions, we'll take the Q&A at the end. Okay. All right. Debunking distaste for dilution. Now, what's dilution? So, stock dilution happens when a company issues more shares of its stock or when more shares materialize, such as when employees exercise stock options or grants. Remember that a company first issues stock to the public via an initial public offering, IPO. After that, other issuances are called secondary offerings. Companies will issue more stock for various reasons. They might, for example, need to raise money in order to grow their business in some way, or maybe to buy another company. Or maybe they're just running low on funds and needed to run the business. To raise the needed funds, they could take on debt or sell some assets. Or they could issue more shares of their stock, which investors will buy. And so there's different nuanced examples on when a company may issue shares. It could be for a host of reasons. Though stock dilution looks negative at first glance, it can be positive if the company uses the additional funds raised in a way that creates greater returns for the company. So there are good ways to use stock dilution, all right? If you're trying to grow the company in a certain way and you don't want to use your cash, you can issue shares. And if you're on the right path, that's going to pay even better in the long run when you equate for inflation and whatnot. All right. And so for some gematria decodes, we have dilution, help a stock save money. That equals 333 in English ordinal. We also that also equals 117 in reduction. Penny stocks dilute to grow, and shares being issued by great stocks both equals 330 in English ordinal. You cast a zero off, that's 33. We have dilution for growth purpose and stock dilution for good purpose, both equaling 137 in reduction, which is the 33rd prime. Dilution helping acquisitions and a good stock dilutes protecting cash, both equal 133 in reduction. And for the big D code, a simple sentence: you issue shares of a stock to protect cash reserves. They equals 3,333 in Latin. And again, it's simple. Some companies, they will issue stocks on the open market to just protect their cash reserves. They might only have a certain amount of cash on hand, and instead of wasting it all to raise funds, they'll go into the secondary offering market. Again, if the management knows what it's doing, dilution could be a good thing. If the management doesn't know what they're doing, or they're looking just to make money off the shareholders and not provide any value into the company and stock, it could be a bad thing. So, even though you hear dilution online on FinTwit, Twitter, and social media, it's not always a bad thing. It can be a good thing. And then when we get into LTNC and CEI, I can show you how it's a good thing and different examples for it. All right, let's get into it. LTNC quarterly report Q1 2024. As I said in the intro, we're breaking it down between the great, the good, the bad, the ugly, so it's easy to digest for people as we go along. This is the first quarter of the year. We're finally getting our things under us for the company. It was the last quarter before going pink. And so to start off, the great LTNC growth profit ratio. And so for people who don't know what a gross profit ratio is, it's your gross profit divided by the total sales. And we'll see in Q1 2023, we had a gross profit ratio of 17.5%, very low. All right. We want to see it higher, which means we want to see our profit, start to outweigh the sales. All right. And so in 2023, that was 17.5%. But in Q1 2024, it was 34%. So essentially, it was double. All right. Which means we are taking more profit in from our sales, higher margins, and things to look at. So okay, what will have make us have higher margins, to have higher gross profit on our sales? Not as many discounts, and I'm not even talking about website discounts for people who go online. I'm more talking about retailers in a lot of ways, because if they want your product, if you want your product on their shelves, they're going to want to buy your product at a discounted price. Okay, and so that hurts overall profit from the sales. Big bulk orders, that's another thing that's going to hurt the gross profit. Obviously, as a company, in the long run, we do want big bulk orders. The more we can sell at one time, the better. But you know, we have to be, it's a balancing effect. And the better we get the more efficient we get in our operations, if we can naturally get our margins higher over time before getting into retail and bigger box stores, that helps us in the long run. So when we do have to give those discounts to bigger box retailers, we're already gnawing on the bone of what's possible margin wise. Okay, so LockdIn has doubled its gross profit ratio year over year, a great sign. To double that at a smaller scale is promising. The more we sell, the less it should cost. The economy of scale is wise. In my opinion, if the company stays away from jumping into big box retail stores too soon, that will allow operations to run more efficiently without giving major discounts to stores and paying product for placement. It is important to keep margins as high as possible to fund our future. I am open to regional convenience stores, small grocery store chains, and gyms at the right price. But direct-to-consumer method is the best, still the best for LockdIn as they continue to grow with limited cash resources. So direct-to-consumer, you know, head over heels for it. I think it's the best option for us. I really do. And so for some gematria, we have startup drink companies need to consider gross profit ratio while expanding. That equals 333 in English reduction. We have gross profit ratio, a key metric equaling 137 in English reduction, which is the 33rd prime. As you see, I still have my 1,555,055 shares of LTNC. You know, I'm down almost 14,000 still. I will be looking to add to my position at some point if my targets are reached, and we'll talk about that a little bit when we get into the bad portion on where potentially the price could go. But right now, LTNC locked in. Great. Gross profit ratio looking amazing. We doubled it year over year from 2023. That's because it's been direct to consumer. No discounts to large sales at all. Obviously, that's going to change in the future. But if we can hone down on our operations now, and we can just, you know, get as much margin off the bone as possible, that's only going to help us in the future. All right. The good cash inflow from financing. On April 19, 2024, an LTNC investor subscribed for 137 million restricted common shares at a price of 0.002 per share for a total of $274,643. These shares are subscribed and paid for and have not been issued. On May 9, 2024, LockdIn entered a private placement agreement for $500,000. The investor purchased the rights to receive 6 preferred H shares, which will then convert into 100,000 shares of common stock. And we'll talk about this more. The Series 8 shares will be filed before the end of the second quarter of 2024. The shares issued and the shares issued. These shares are considered subscribed for and paid for and not yet issued. So some point in the later in the second quarter, which we are in right now, and so it's probably going to have to be in June. So at some point in June, these shares should be coming online and subscribed for and paid and issued. For Q2, LockdIn generated, and this is what this has happened. This didn't happen in Q1. This happened firmly in Q2. So, you know, take whatever cash reserves we had in the first quarter of the year. This is what we have currently as of the report now. So in Q2, LockdIn generated $774,000 of cash from share issuances. If cash operating costs stay about the same, LTNC should have close to $400,000 in cash at the end of quarter 2, hopefully. The company has desperately needed infusion of cash to run the business. It is a great sign people with large pockets are willing to invest large amounts of money to see the company succeed. So this is firmly a good thing overall. We have people who want to invest large amounts of money to get shares to provide us cash inflow. And so now when we see Q2, we've seen low cash reserves on, the annual report for 2023 and on the quarterly report Q1 for 2024. But Q2 2024, we should see an uptick. And so now that's promising. Not only we'll have good numbers for sales, because when we got pink, everyone was buying crazy. We'll also have good cash reserves, and the management, if they make good choices, the dilution will fade off over time. The dilution will still happen, but it will be for great purposes. Okay. And so I'm going to get into who I believe who that LTNC investor is and how these Series 8 shares are set up. And this is why it's in the bad. All right. It's a double-edged sword. The bad, LTNC dilution from cash financing. And so I do have from Q1 2024 the share issuances currently held at DTC, which if you talk around OTC circles, held at DTC is the true tradable float for OTC companies. And so right now that's at 8 billion essentially. And once we got current, that updated. So April 5th, we got current on April 1st, but on April 5th, that Friday, it updated. Our DTC was 7.4 billion. And so between that time, between April 5th and currently now, I know it's May 30th today, but as of as of May 27th, when they updated, it was an addition of 610 million shares to our float. And so when you actually look at the papers, all right, this is why it's important to look at the filings, because it will tell you where all of this has went. Okay. So during the year ended December 31st, 2023, the company owed a total of 1.72 billion shares of common stock valued at $541,000. During the 3 months ended March 31st, 2024, at the end of Q1, the company sold 225 million shares of redeemable common stock for $225,000. Including the amount Tom Mazzaro of the company's CEO purchased 50 million shares for $50,000. During the 3 months ended March 31st, 2024, this is important, the company is obligated to issue a total of 350 million shares of common stock valued at $120,000. So that's what we're looking for, all right? So understand that. The company was obligated to issue a total of 350 million shares, and they did so, okay? And add on to the fact that the company also sold 225 million shares of redeemable stock in Q1 also for some money. That money for Q1 was already ran through. If you actually look at the numbers, our operating cost for Q1 was like $270,000. And so that money, that those shares that we sold in Q1, that was already run through. And so the financing we got for Q2, that's a new batch. And so that's where most of the dilution came from, the sale of the 225 million and to the obligation of the 350 million shares to the services. So up until this point, we still have 1.37 billion shares that need to be vested from locked-in professional service fees. So we're not out of the woods yet. The bad continued. Confusion on Q2 preferred H share issuances. And now, after reading a little bit more, understanding how some of these things work, I do believe the person who gave us, who got all the Q2 share issuances is Luis. It just makes sense. And he also has the Series 8 shares as well. And so a little bit, there's a huge difference on this financing deal being company friendly for LockdIn to being borderline silly for LTNC investor or having the best benefits on both sides. And while I do have my answer, I do want to still go through the process so you can understand, investment wise. There are two scenarios which would affect the stock price due to the Series 8 share issuances. Scenario one, which I don't believe to be the case after more talking and thinking about it, all Series 8 shares equate to 100 million in total, meaning an investor paid 500,000 for 100 million in shares above market value on May 9th. The price of LTNC was 0.004 on the date of the deal, meaning the investor paid a total of 20% premium of shares that could have been bought on the market. The investor average share would have been 0.005 for the 500K divided by the 100 million shares. And again, that's a little too company friendly. It wouldn't have made sense for the investor. So that was the first scenario. At the time I was writing this, I thought that could be a possibility. But after asking Tom questions, I didn't get an answer. So I think, and if it was the case, they would have said this was company friendly. But that's okay, because scenario two isn't so bad either, especially if it's Luis that holds them, which I do believe he is. Each one, so in scenario two, each one share of the 6 Series 8 shares equates to 100 million shares, meaning 600 million LTNC shares for the 500K investment. The average share price would be 0.00083, which is triple zeros 83, which makes a lot more sense. And this, in my eyes, more reasonable for the investor. So you pay $500,000 cash upfront for the discounted shares. When the investor converts the 8 shares, the float expands. The price drops, but the investor would still be in the money as to his investment. Instead of his investment being converted at 0.005. All right, and so how these shares work, again, at the bottom, this is what it says. This is why you got to read the filings. All right. The company has had investors subscribe The company has had investors subscribe for the rights of preferred 8 shares with the company will have designated the second quarter in 2024. Each share of preferred H equals 100 million shares of common stock on conversion. So that means is if you have 6 H shares, that's 600 million shares. Okay. And these are not issued yet. They will be at some point. So should reflect on the Q2 report. Now, it doesn't really break down on the stipulations for these shares, but hopefully there's a timetable on conversion. So if the preferred holder, who once again I do believe it's Luis, if Luis converts 8 share of those 100 million common stock, say at the end of June, hopefully he can't convert another 100 million for another month or two. And so that spaces out that dilution. All right. We still get our money. He still gets his shares. But when you space out the dilution, it doesn't hurt the stock as much. And I think that's the best course of action for the company. While 600 million shares is a lot, we already saw what 600 million share issuance did to LTNC in Q2. It happened in Q1, but we saw what happened. So we went essentially, I mean, our peak was a penny, but really we went from, say, 0.07 to 0.004. All right. So that's what you can kind of keep in mind moving forward for the dilution. I still believe this is a net positive for the company as we need the large infusion of cash to operate. The stock will be suppressed, but it would be for the best reason possible if management can use the cash wisely. This is in the bad section of my analyst due to the ambiguity. If blockheads have to wait till Q2 ER to see the effects of the 8 shares without explanation from management, I believe that goes against transparency we've been told to get. I understand you can't talk about everything, but again, transparency is what they've been preaching, and so that goes for everything. So it's looking like it's going to be 737 million shares could potentially be issued in Q2. All right, and so keep that in mind. We've gotten cash, we've gotten services, but we have to pay the piper at some point. And remember, we still owe those 1.37 billion in professional service fees. All right, the bad continues. And again, the bad section is a little bit longer than everything else. It's because we're a startup company. That's par for course. All right, I'm going to give you the good with the bad. I'm going to give you the good with the bad. LTNC still owes James D.A.T.A. LockdIn has accrued a total of $2.1 million from the total loan and accrued interest that Mr. D.A.T.A. is claiming. The company is currently in negotiations with other parties to settle the lawsuit. This needs to be settled fast. It's not a hugely bad thing. They've been talking, they've been in talks, but we need to stay out of the courtroom. So we could just put all our energy back into selling water, selling nootropics, and building our brand. But we keep having to deal with all these other legality issues, and it's just, it costs more service fees for one, and it's diluting our energy for what's important. So that's still firmly in the bad category. The bad continued. I promise this is the last bad until we get to the ugly, right? The PFL has sued LTNC for allegedly breaching contract. On April 19, 2024, Takeover Industries, Inc. was sued in the United States District Court for the Southern District of New York, Professional Fighters League, LLC versus Takeover Industries. The suit arises out of the sponsorship agreement, the agreement Takeover entered with Professional Fighters League, LLC, December 16, 2021. Takeover was able to continue to make payments as detailed in the agreement, thereby terminating the agreement per the terms there within. This matter is in dispute, but the company intends to vigorously defend the action, and it feels it will prevail as a matter of law. So that's a good thing. On May 13th, 2024, counsel for the company filed a motion to dismiss pursuant of the Federal Rules of Civil Procedures. The PFL is alleged damaging $2.1 million. The company had previously accrued $441,000 for amounts owed up December 31st, 2022. Based on the express terms of the agreement, it is the opinion of the company, as expressed more fully in the filed motion, that the plain and unambiguous language contained in the agreement limits any liability to the amount that the company paid. LockdIn management and lawyers ultimately believe that this case will be dismissed and resolved without any payment to the PFL. But this is in the bad section because we need to find a way to stay out of the courtroom, as I keep saying. We need to stay out of the courtroom. Our energies need to be focused on offense, not playing defense. I'm not worried about it long term. As you said, LTNC's, LockdIn's lawyers, they believe that they have great standing. So I'm just not going to worry about it for now. So if they feel like they got it in the bag, we're going to keep moving forward. We're not going to worry about it. All right. The ugly. We're at the end of the LTNC presentation. The great, the good, the bad, the ugly. The ugly. LTNC and LockdIn losses. LockdIn has an accumulated deficit of $9.3 million, meaning it's $9.3 million in the hole since its inception in 2021. We haven't we just haven't gotten out of the hole. We're almost $10 million in the hole. It is what it is. We're a small company. LTNC total stockholders deficit is 3.2 million, meaning liabilities outweigh company assets by 3.2 million. Again, we'll have more cash on hand Q2. We'll get more sales up. So the stockholder deficit should be shrinking. And at some point, hopefully, we have a positive net equity on that in the coming quarters. While this is in the ugly section, and it is ugly to see, being that LockdIn is a startup company, this is very normal. The issue comes in how fast management can turn these deficits around, which will likely take a few years. Any short-term relief is doubtful, in my honest opinion, but I am still bullish long-term. It's just going to be a while. And so look at all of this, you know, the great, good, bad, ugly, especially with the dilution company. I'm not a financial advisor. I could be totally wrong, but I could see the price still to dwindle lower. Right now, it's been, if you look at the stock, it's been low volume and the price really hasn't budged. Best part because the float's essentially locked up. You know, people aren't selling shares. They're buying when they can buy. But most of retail investors have buyer's exhaustion. They don't have a whole lot of cash to deploy anymore. But the fact of the matter is we're going to be adding more shares to the float soon. The price is naturally going to continue to lower. And if you put my feet to the fire and you ask me, how low do you think, you know, the stock can go? Again, I'm not trying to be a bear. I'm not even being an alarmist. I'm trying to be a realist. If we saw what happened with 600 million shares added to the float in Q1, and we have about 700 million shares to go in Q2 at the very least, on top of whatever the service fees with 1.3 service fees, we could be a stock that ends up in the trips. I have to say it. I'm not trying to, you know, I'm just trying to give you the real. I'm not saying it could happen. You know, Luis has been buying a lot of shares lately. You know, he has 800 million shares total. Okay. He has almost 1 billion shares. And that's why I believe he is the preferred shareholder. He is the preferred shareholder of those 8 shares. But that doesn't negate the fact that those have to be issued at some point. All right, we still have to issue the service fee shares. So just keep that in mind. I think if we go lower, once the price gets to 0.002, I'll start looking to add, but I'll be looking for trips as well to add to my position. I haven't added in 3 years, but I will if the opportunity arises. But overall, still bullish. We still have a lot to go. So that's it for the LTNC LockdIn presentation. Anyone that's interested moving forward with the Camber Energy quarterly report, I'm going to go into that one next. All right. But for my lockheads, hopefully you enjoyed my visual presentation on my thread. Go back and enjoy it and learn from it. So let's get into Camber Energy Inc. Q1 2024 quarterly report. And this is James Doris's notes that he DM'd me, but he also tweeted it out. Okay. And so this is how he would have done it. Okay. So CEI Q1 items of note. 8.3 million in revenue compared to 93,000 in Q1 2023. So that's year over year. Stockholder equity is 20.2 million compared to a deficit of 19.5 million in Q1 2023. That's year over year. Majority of loss is attributed to non-cash items, elimination of Florida's convertible instrument, which is important, compliant with NYSE continued listing standards, power solution division is important in performing, milestone reached of carbon capture technology, which they should be doing a presentation a lot at Holyoke soon. They're setting that up. So I'm excited. Hopefully they have a lot of videos for that. Distribution agreements and POs received, purchase orders received for Viking Ozone Division. That's awesome to see. And if senior debt is paid prior to January 1st, 2027 maturity date, then any remaining undelivered true-up and entitlements to preferred shareholders will be extinguished. So we're at the end of the preferred share debt spiral. Okay, we have money coming in. I believe it's 16 million we have to pay off, and then if we pay that 16 million off before 2027, We don't have any more true up shares added to the float, which is amazing. That's great for us. Okay. So the revenue, as this is what the estimate. So we had 8.3 in revenue in Q1 2024. If I times that by 4, and it's just a estimate, okay, it could be higher, it could be lower, but if we estimate that times 4, that's $33.1 million. All right, so that'd be a million. That'd be a million more than what we did in 2023 for fiscal year revenue. Cost of goods sold in 2024 Q1 was 5.9 million. You estimate that times 4, 23.6 million. That's going to be more than what we did in 2023 for COGS. That's something to keep in mind. But if we keep getting purchase orders, obviously we have highly, cash intensive things we're selling in our power division. So if we can get those costs down somehow with economy of scale, the better. And per the Q1 report, the shares outstanding at that time was 151.9 million shares. That has since changed, but of that report, that's what it was. The stockholder equity is 21.1 million. And so if you go base it off that, the stockholders' equity fair value or book value is 13.2 cents. Then you had 13 cents. Then you had estimated revenue fair value stock prices, 21 cents. And recently, I bring this up. This was technically in Q2, but this is important for future revenue generation. Camber Energy announces purchase order for 3.5 megawatt customized power system. It was worth it was a $3.8 million in Canadian dollar purchase. And so when you do that, so 3.8 million Canadian dollars equals 2.7 US dollars. So it was a $2.7 million deal for the US in US money. And so we're having purchase orders coming in, we're getting that revenue. We just got to get the COGS down. We got to get the cost of goods sold down. And so we have to get into the dilution true up share tracker. Okay. This is very important to the price. All right. It's something that we've been dealing with for a long time for this company, a long time. And I think we're at the tail end of it. The company has determined that the Series C preferred stock contains an embedded derivative liability relating to the conversion premium and, upon conversion, a derivative liability for potential obligation to issue true-up shares relating to shares of Series C's preferred stock that have been converted. A measurement period has not expired. Page 22. On March 25th, 2024, the company received a notice letter at NYC stating that the company was back in compliance with all the NYSE American continued listing standards. As a result, the measurement period related to prior conversions of the 240 Series C's preferred share stock ended, and the number of remaining true-up shares due from these prior conversions was fixed at 101.5 million shares. This would reduce the value of derivative liability associated with true-up shares to zero. And the fair value of the true-up share obligation at March 25, 2024 was reclassified to stockholders' equity as common shares to be issued. So for $16 million of those 101.5 common shares resulting from true-up shares issued owned regarding measurement period on non-compliance is now classified as equity. So as short, the 101.5 million common shares are now considered equity. So that's $16 million the company has to pay before 2027. So they don't end up into true up shares added to the float. So we have 2.5 years to pay off this 16 million. I think we can do it with the revenue we're generating it. Okay. So yeah. So this is the post 2024 quarterly one ER dilution. So first, page 43 of CEI 10Q states that 10.4 million shares were added in Q1 from non-preferred C share means, and that means 4.5 million of that did come from the Series H. And so non-preferred C shares was 10.4, and then 4.5 of that came from the Series H. And then page 56 shows preferred C shares conversions was 31.1 million. So in total, 41.6 million shares were added in Q1 according to this report. You know, again, you can go on page 43 of the 10Q and read that yourself. The post 2024 Q1 ER outstanding share update is 175.8 million shares outstanding. Okay. And so the estimated revenues of 2024 is still the 33.1 million. And the stockholder equity is still 20.1 million. But with the updated outstanding share update at 175 million, the book value, the fair value stock price would be 11 cents. And to the revenue fair value stock price is 18 cents. And so you see where CEI is trading right now. It's trading about 17 cents. I'm at actually 11,000 shares now. So I'm there. My average share price is under $4.50 now. But it's holding with all the dilution prior in Q1. It's holding its worth at 17 cents, which is great to see. So it's trending a lot closer to the revenue fair value stock price. Camber Energy stops dilution in 2024, 137 in reverse reduction, the 33rd prime. Camber stock dilution is over in 2024, 333 English ordinal. Powerful decode. Powerful decode. You saw James's notes. You saw what I brought up from the filings, the 10Q. The true up dilution is essentially over. They converted it, which is non-cash items. We have to pay that out now, but there's no more bottomless, conversion floor. So these are all good things. Once Camber Energy gets the carbon capture commercialization up and running, once we get the grid detection broken technology up and running, that's more revenue. So we should easily pay off that 16 million to Kirkland at the end of all this within 2.5 years. So things are looking up for this company, in my honest opinion. So that's what I have for Camber Energy, just breaking down that quarterly report real quick. Really, it's just, we know the company's growing. It's more or less getting that dilution out the way. And I think we are on that path. So we'll see what happens in Q2. But things are still growing. Power generation is doing amazing. We have commercialization of carbon capture coming with a presentation soon and in person, so people can see the technology in person. And then we're just waiting on the broken tech line detection to come online as well. So I'm continuing to add. I'm at 11,000 shares now, and I'm going to keep adding along the way. But still, very bullish. So before we end, let's get into the data cap divvy pack. I did have TD Ameritrade, but we did switch over to Schwab because Schwab did buy TDA a couple years ago. So I finally got switched over to Schwab. I still have Thinkorswim, but I'm still learning the new concepts on this brokerage platform. So this is a little bit different than what you've seen in the past for my live streams. For the data divvy pack, I've actually added to the portfolio. So I have a 10th stock I added. I added NAT, NAT, and we'll talk about Nordic American tankers next month in my my next YouTube live stream. Okay. And so the current month of May, we have a subtotal, everything added, $86.88. Previous month, we are up 131.81. Right now, the account value at 4,700. The total I'm getting in almost $300. A total amount of dividends I'm bringing in this year in 2024, $300, which equates to a 6.3 dividend yield, which is pretty high. So it's better than any high yielding savings account right now. This is my savings account essentially, and so that's it for my data cap divvy pack. I'm sorry. Look, I'm sorry, guys. For some reason, my YouTube live stream was not up and running. I apologize for that. I had to restart everything. It started an hour late, and I'm kind of redoing everything, which is making me a little bit tired. But hopefully, you still got a lot of information out of this, and hopefully, next month it'll be a lot easier. I don't think anybody has any questions or anything like that. So I'm going to just wrap up this call. This is going to be on my page that you can look at, move forward. And I still will edit this up and put it on my other pages as well. Art Turner, Data Productions Media, dreams are tangible aspirations where we scheme our dreams into existence. I love you all, and I'll see you in the next video.